All right, everyone, welcome back to the weekend market wrap up with myself, Michael Nauss from StatsEdgeTrading.com. As always, if you are new here, every weekend we sit down, we go through what happened this week in the market, which was a very big week, and then we try to figure out what we could potentially be seeing going into next week. And starting this week, I give one discretionary idea going into next week. Now, people who are subscribed to Stats Edge Trading Pro will get access very soon to all of my ideas when it comes to the algorithms that I run and all the scans that I run. So if you're interested in that, to trade with edges, algorithms, and systems that I've back tested going back till 1980 till today to show that we have some edge. I output all of those symbols and I do another special video where I go through each and every one just to kind of say, hey, this is what I think we could focus on based off of these particular outputs, again, that have an edge. Go to statsedgetraining.com, sign up for that. It's a lot of fun. We just opened up a Discord, which is the last channel or last video on this channel if you want to check that out. And we're chatting in there all the time about these algorithmically designed picks and kind of what they're putting out. So make sure you come check that out. But crazy week this week. And before I get into the screens, I want to kind of talk a little bit about what happened with FOMC because I have seen this overarching narrative of the Feds cut rate, and that's bad for the market. When the Feds cut rate, we need to sell everything. It's going to be the end of the world. I've been through the data, and a year later, 80+% of the time, the market's up. It's like 75% of the time, we're up 6 months later, and even 70% of the time, we're up 3 months later. So there is absolutely zero evidence that these people are saying that a Fed rate cut means that the market is going to move lower. I don't know where that came from. If anything, overall, it's bullish. The two times that they cut rates and the market was down was 2001 and then 2007. And in both of those times, obviously, there were circumstances outside, and the Fed was aggressively cutting rates in response to some sort of massive issue that was happening in the market. So ignore the doomsayers, focus on price. And with that being said, let's actually go in and focus on price. We're gonna start here with Bitcoin. Bitcoin is getting very, very interesting. I don't know. I forget how long I've been talking about this cup and handle style pattern. Let me bring out do I have my Epic pen here? No, we'll open it up here. Epic. This cup and handle pattern, I think every technician on planet Earth and most crypto bros who are not technicians are looking at this pattern. However, I've kind of a broken record on this, so I'm sorry for anyone who's been watching the whole time, but I've been saying this for an incredibly long period of time where, yes, we have this kind of cup and handle look, and this looks fantastic, and it's exactly what we want to see. Sorry, I've done a lot of talking today. However, for a cup and handle to exist, we need this breakout to occur. And I've been talking about that the whole time where, yes, it looked like a cup and handle right here, and it even looked like a little cup and handle back here. So there's been multiple breakout attempts that have failed. This time, we kind of just need one to stick the landing, and we need to get a nice overall breakout on this. So we're talking 68, 69,000. If we can get above that and we can hold above it on a longer term basis, then I'm interested. Full disclosure, I am in some Bitcoin. I mentioned that a couple weeks ago. Down at this level, I just grabbed a little bit for a support play. It's ended up doing very nicely. So now I'm just sitting on it with a break even stop. So if we break out, I want to buy more. But until then, I'm not doing a whole lot. And when it comes to this, we need to make sure that we're understanding that Bitcoin continues to be the leader. So Ethereum, although Ethereum is very interesting and a very good look, we have prior resistance here, we have support right here, and we have support right here. It's a very good look. It's a very strong area. Call it 2100 to 2000. That's been a strong area. It looks like we're bouncing off that. But if we look at good we are, how strong we are relative to these prior highs, we are well below that on Ethereum. So it continues to be a bit of a dog here. I always keep out Doge just for the memes. Yes, it looks like a cup and handle as well. And if Bitcoin really starts rocketing, you're going to get more beta out of these meme type names. You just need to understand what you're trading. So if Doge continues to push higher, and breaks out of this cup and handle play, that might be a play there as well. Now, looking at the overall currencies, we do this with the dollar index, which is a basket of currencies. We continue to hold, and I should probably move this line down just a little bit, maybe to there, be a little bit more precise. Again, always draw your areas with a crayon, not a pencil. They're always areas. But we continue to fight this zone right here that we've hit a number of times now. We broke through it a little bit this week and then we bounce back up. So the dollar continues to be range bound. I would have to imagine at some point that this is going to resolve lower just because of the fact that you've knocked on the door one, two, three, four, and now five times. It's very rare to have a quintuple bottom. Uh, we could, certainly. I think anything can happen in the markets, but I have to imagine that at some point, even if we get a little bit of a bounce, we sell lower. When it comes to currencies, that's kind of what I'm watching for. If we get a bounce here to maybe 102 or something, and then that bounce fails, I think that might be a play to make. If we break down this decisively and then we bounce back up, that might be another play to make. However, the other thing we got to keep in mind though is that dollars forex just doesn't trend in the way that normal markets do, so we got to keep that in mind. A couple of the pairs that I like watching, these cross pairs, I look at the dollar index because that's going to cover a lot of the pairs, but I like some of these cross pairs as well, and one of them is this euro pound at this area right here. Prior support here, maybe a bit of support there if we can get a bounce off that level. That's very interesting there as well. If we go down to take a look at the yen continues to be a very interesting story, and it did a pretty sizable bounce here right here after breaking this low. So we broke this low. We had a weekly confirmation above that low. I read, a lot of doomsayers saying, "Hey, the yen's going to just continue to bleed down." Reverse that very strongly this week, closing quite up. So this could be an interesting low to play against. So next week, my game plan for the yen, which I'm just going to mark this right now in green before I forget, is that I want to essentially be buying dips here on the yen on the daily chart, see if we can get back down to this level. If that acts as support and we push higher, it could be a good little place for the yen. If we look at the franc, holding support right here, and then look at the Canadian dollar, this kind of looks like the opposite. If we do get that failure, I think I talked about this last week. If we do that, get that failure with the dollar index breaking down, you got to imagine Canadian dollars is going, or CAD is going to join with it. That obviously means CAD going up if this pair goes down. Gold continue to breaking out, new all-time high on gold, new all-time weekly closing high on gold. Exactly what you want to see. Over and over and over again, it continues to be the case where we see new high after new high after new high, and absolutely no complaints there as somebody who holds that and has been kind of pound the table on this for a while. Very, very close here on silver. Very, very close, right? We had this prior area right here that we were kind of bouncing around and bleeding through. We finally broke that on silver. Looks like we could continue higher here on silver. If gold continues this march, you got to imagine that silver will as well. Now into the equity markets. Let's take a look here. Let's actually shift this over to a weekly chart. And then let's take a look here, starting with the SPY. Actually, scratch that. Let's go back to it daily. So this was very, very interesting. So this day here was actually the FOMC day. And I remember everybody saying, I was reading on Twitter all the time, oh, they cut rates. It's bearish if they cut rates. We should be very careful. And this, that, and the other thing. The next day, it was actually hilarious. Zero Hedge put out a tweet when we closed at lows on this day that it was going to get very ugly. I made a little bit of joke that, fading Zero Hedge seems to be the absolute ticket. We gapped up the next day, put in a little bit of a doji, and then we gapped today and we put in a little bit of a doji. So just showing that at least intraday, there is a lot of indecision happening in the markets. However, if we zoom in and look a little bit closer here, we can see that, yes, we had this prior area of resistance. We broke that. We came down intraday, we touched it, and then we bounced. So for me, that's the first positive touch on that intraday basis and showing that yes, when you pull back into a prior area of prior resistance and then you see buyers there, that's exactly what you want to see. That is textbook bullish behavior. Everyone who got trapped to the short side, as soon as they saw the moment to get out, break even, they bought. Everybody who missed the gap up that happened on this day, they bought as well. Absolutely amazing. Uh, However, the Qs, QQQ, nowhere near highs, right? Not even above this high right here. Not even close to this high, showing that things other than tech continue to be the thing that is moving. We're outside of tech to have things that are moving and to have things that are pushing around. So what are those things? Well, we have XLI, which is our industrial sector. That's breaking out to new all-time highs. We have XHB, which is home builders. We have that breaking out to new highs. We have um, X8 XLB, which is materials, breaking out into new highs. A lot of these boring sectors are going to be the place to shift your attention going forward. That and this nuclear movement that happened today there was some news where Microsoft is going to buy a nuclear power plant, essentially license one for AI. And we had a nice push out of the whole nuclear sector here as well. So mostly things that are either AI or AI adjacent, but we're going kind of down that cap sale and that money is getting spread out. So that's great for us who are going to pick stocks. Now, what I am interested in, full disclosure, I'm already in some UNG, but I was going to talk about my one discretionary pick, the trade that I may add to or play going next week. This week's going to be UNG or natural gas. Now, I took a trade and I was talking about that right back here, and that worked out fantastically. I would love this to do the same, but I have no idea. However, what I'm looking at is that we kind of undercut this low, maybe sucking in some short sellers. I bought a little bit on this day, and then it's been consolidating sideways ever since. But we had a nice little breakout today. We did so on 1.36 times normal volume. So I like the look of this one. Your stop is pretty clear. If we kind of break and close below this low right here, it's time to go. If this is right and this is a bottom and we're getting a shift into more energy and energy related names and UNG starts to push higher, I think you could get a play there. Now, not really interested in going into individual names on this one just because UNG is volatile enough for me. I don't need any sort of leverage by looking at individual names. I'm totally good at looking at natural gas. So that is what I'm looking at for this week. I thank you all for tuning in. Make sure you go over to StatsEdgeTrading.com, check out the free trading course, check out the advanced trading course, check out the StatsEdge Pro if you want access to my algorithms, all that fun stuff. Thank you very much for tuning in. And until I talk to you next time, get away from the screens.